Is it time to buy the Tesla stock dip? You've seen the stock drop 44% from 1243 at its all-time highs all the way down to $700 a share on February 24th. Since then, it has bounced back up to 801, where it's now only 35% off of its all-time highs. Huge expectations for the stock still going forward. It has a PE ratio of 117. Is it time to buy the dip right here on Tesla stock, or should we wait for a bigger decline? We're going to talk about that all and more in this video. We're going to go through the technical analysis and the charts. But first, make sure that you pound the like button and subscribe to this channel so you get all the notifications, and click the join button down below so you can get all my stock market research delivered to you each and every day. Let's get right to the charts because there's a lot to go over here. As I mentioned, we may have seen the bottom here on February 24th, right here with these lows at 700. And since then, it has managed to put together a little bit of a bounce, but it's not synonymous with what you typically see out of major bottoms in a stock. You have yet to see the major bottom form in the Qs just yet. We're still hovering at those lows. So there's not a bottom yet in the Qs. So with Tesla, I still have a lot of doubt whether or not we've truly seen that generational massive bottom that we're all looking for. And it still remains below all of its major moving averages, despite the fact that it rallied 4.6% today alone. Now let's zoom back out a little bit further. You have a major double top here that's of huge concern. These double tops typically see, once confirmed, you usually see a continued decline that's equal to the point of the second top to this valley right here. That's about $350 a share from 1243 down to the 890 level, give or take a few dollars. 350 from this 886 to 890 level here takes us down to about 530. Now, the reason why I bring up 530 is that there's a lot of support going all the way back to 2021 at about the 550 level. So it's just a shade above 530, about $20 north of it. But I could easily see where this level right here could end up offering some incredible support for the stock going forward. So right now, I have this as my worst case scenario for Tesla, going all the way back down to the 550 level. That's assuming that the Qs are not ready to bottom just yet. I know that's not what a lot of people like to think about, that they have long positions right now that are already bleeding, and the thought that it's going to pull back even further is just unfathomable. But the market doesn't care about where we got into a stock at. It doesn't care about where our points of pain reside at. It's going to do what it wants. So if the NASDAQ continues to sell off, we continue to see the selling with the S&P 500, yes, Tesla is more than likely to continue its sell-off. Right now, it's 35% off of its all-time highs. It could easily fall there. Now, I'm not a Tesla hater. I like Tesla. I own a Tesla, but I'm also willing to put my feelings aside and what I think Tesla should do and look at it from what the market may make it do. And the market always wins, regardless of our opinions. You also have a long-term trend line here going all the way back to the March 2020 lows. And this trend line was broken. This is a major trend line, and it is gone. So that is not going to play well going forward either. Now, I expect to get some hate in the comments, okay? I expect a lot of people say, Ryan, you don't know what you're talking about. This is a company that's the next Apple. This is the company that's going to be, heck, I've seen videos out there that says that Tesla's going to $1 million a share, and they're full of crap, by the way. But what I'm here to do is try to give you the most realistic and honest opinions of Tesla. This is to provide you with the most realistic outlook there is for the stock, and not to simply tell you that a stock's going to the moon just because that is what you want to hear. No, I'm here to try to keep you from making bad decisions in the stock market. So with Tesla, there is the potential for 530. However, what would make things turn around for the stock going forward? First of all, we cannot violate the February 24th lows again. That has to hold. You also need to see the market start to respond more favorably to some of the headline risk that's out there. Namely, the situation with Russia and Ukraine needs to get resolved. You also have issues with the Federal Reserve wanting to hike interest rates. That's not going to be good for tech stocks because tech stocks thrive on low interest rates. And when the interest rates go up, the cost of that debt also goes up. So that's not going to be good. That can also drive the PE ratio even lower. And we're in a market right now that's penalizing high PE stocks. But first, let's get back above this 200-day moving average. That's the white line right here. Then get back above these March highs. If you do that, then you have not only a higher low formed right here over the last 2 days, but then you would have a higher high formed with the break of the March highs. That would be significant. And then try to get back over this 890 resistance. This resistance here goes all the way back to the beginning of 2021. This is going to be some heavy resistance. So Not only does it need to break those March highs, but it needs to get back above resistance at about 890. Heavy, heavy resistance. But if you believe in the stock, these are the steps that it needs to take. It cannot bog down in these areas, or it increases the likelihood we're just going to go right back down to 530. Now, here's my personal take on the stock. The stock market is on the wrong side of the Federal Reserve right now. We're going to start seeing interest rates hike immediately starting on March 16th. That's going to weigh heavily on the stock market, especially if they're going to continue to aggressively raise those interest rates throughout the rest of this year and into 2023. The S&P 500 right now has a PE ratio of about 24. Historically, that's usually somewhere between 16 to 18. So there's plenty of room for the S&P to continue to fall back, which will also put a lot of pressure on Tesla as well. Regardless of how optimistic you are about the company, it's going to be affected, just like we've seen so far here in 2022, by the overall market conditions. And with there being further COVID lockdowns, you're risking further interruptions in the supply chain, which could also affect the Tesla stock. So my takeaway on this right now, the entry right now on Tesla is great if the market can stabilize here. I just have a very low confidence right now that the market will stabilize simply because of what we have seen from the stock market over the course of history when they start to raise interest rates. There's the old saying, you don't fight the Fed. Right now, being optimistic on the market going forward is in essence fighting the Fed. And buying Tesla right here is also, in a sense, fighting the Fed, believing that those interest rates won't hurt the market and won't trickle down and hurt Tesla as well. If you enjoyed this video, I'd encourage you to like and subscribe. And make sure that you leave in the comments, what is your strategy? What is your plans with Tesla? I am open to hear what you guys have to say. I want to hear what you have to say in the comments. Tell me what you think. Thank you guys, and God bless.